Hey guys, it's me, Alexander Jarvis from alexanderjarvis.com and 50folds.com. Now today I'm really excited to tell you about the new Pro Cap Table that I built. Now you may have become familiar or downloaded before the Ultimate Cap Table. It was a free one. I made it back in about 2015, and you know what? It's still probably the best free one you can get on the internet, but there still are some limitations. People over the years have reached out to me and they've asked me if, why can't I have this feature or this functionality? Can I make it more scalable? I want to have more line items, add more investors or, founders onto the cap table. And you know what? Trying to change that model was kind of hard. So I said, you know what? Screw it. Why don't I actually make something that's far more advanced and has got way more features? And when I mean advanced, I mean like better than what top tier law firms use. And I know because I checked. So this thing is genuinely really badass and you can go as complicated as you want to. But if you want to keep it simple, it's also pretty easy to do that too. Now I've totally changed my entire approach about everything I think about how cap tables been done and really thought about making it on a modular basis and making it super flexible where you can have, 1 million people on your cap table for all I care. All you need to do if you need to expand it beyond the templates I've made is just add some rows. It's really that simple. There's a whole lot of special things about it. So what I'm going to do in this video is I'm just going to give you a quick overview and try not to get too nerdy, but I'll explain all the features that are in them, or some of them anyway. And you can get an idea if this is for you or not. If it's not, that's cool. If it is, I promise you, it's pretty special. Okay? So, just kicking off, let's look at the first sheet, which is a format sheet. Okay? Now, I know I formatted things up to look like assumption boxes or input boxes. You don't actually need to change anything on this sheet. It's just set out there so you can actually understand the variables that are going in that fit into the drop-down menus. And so all these things here end up driving drop-down menus. So, I've written a fantastic blog about how conversion notes actually convert and the fact that there's 3 different ways that you can do that, which I'm pretty sure most people don't know about, right? Well, in this model, all the math is done for you. You just pick the option and you can read here how that works, okay? One person asked me if I could figure out a way of how you could automatically prorate investors, especially if you're looking at running scenarios, forecasting in the future about how much money you might raise. Well, I figured it out, and that's right in here. We also allow you for your ESOPs, your share option schemes for staff, to deal with the main types. Now, this is designed on the American sort of system where you can have restricted stock or RSUs and the sort of vanilla types you get, which are ISOs and NSOs. If that doesn't apply to your country, and I'm sure it doesn't apply to a lot of countries, just pick ISO as a standard, or you can change the name if you want, but if you change these, you pay a little bit more attention to the model. It's best to just sort of leave things as they are. I also have automatically calculated how vesting is done for your staff. Now, I covered the 3 main options. Let's face it, there's only really one which makes sense in my opinion, which is this first one here. We have 4-year vesting and monthly vesting. I've also made 2 other ones which I think would be the most popular. And all you need to do, put a drop-down menu, and suddenly all your staff vesting is calculated for you. I also allow you to do accelerated vesting. And here, this is a means by which, we'll come to it later, but you can note on a ledger form what's sort of going around. Now, we'll come back to that later, okay? So don't have to touch anything on the sheet. It's mainly there to educate you and for you to understand what's going on. Now, let's head on to the fresh sheet, the first one you're really going to want to actually play with. Now, here is a basic shareholder ledger. You don't have to put anything on the sheet if you don't want to, other than the shareholder name. Now, this is really key because this drives almost every sheet in the model, okay? Or anywhere where calculations are kind of done on a shareholder level, right? So you want to make sure you type the name of the people in, so that will drive through the model, okay? The whole point of this sheet is sort of like an aide-memoire for you to understand what you should be filling in at what sheet. So, okay, so we see the founders, okay? I've got common stock, it has restricted stock, you know, we have a Series A investor, a Series C investor, when the date of that closed. If you want to use this to actually, you know, facilitate communications, that's what lawyers do. You can type in their mailing address and their actual email and really treat this as your real cap table, which is sort of the point, right? And you can also make notes here when something happens. So let's say you have a founder, you fire them. Well, you could say you issued them common, but then, do you know what? 2 years later, they were terminated and they've only vested half their shares and they expired, okay? So you would note that down, and then in the requisite place, which, you know, for a common shareholder would be on the common sheet. For staff, that would be in the ESOP sheet, or et cetera, okay? Now, I know what you're thinking, hey, shareholders sometimes get repeated. Look, SoftBank's here 3 times. Isn't this going to end up in the drop-down menu 3 times? No, because I did spanking cool little formulas, which are hidden somewhere on the side here, which you will never really know about. And it makes everything nice and clean for you. Okay, I thought about little things. Let's head over to the calculations sheet. Now, this sheet is where a lot of the technical calculations get done. I put them purposefully on one sheet so you can see in one view what actually is happening on a round-to-round basis. So we can see for our Series A all the way to our Series I. So you get 9 series of shares that you can play with, preference shares. You can see the closing date, the pre-money, how much was invested, if there were convertible notes, all the way down to what happened if you increased your option pool sizes, if there were any conversions that were happening or what the basis of that was. Then we have some checks to make sure everything's working out. If you see these little tiny little rounding areas, don't worry about it. It comes down to the fractionalization of shares. You just sort of need to figure out how you want to deal with that. But if there's a tiny little number like that, it's not really a big deal, okay? Next, we can see a summary of your pro rata calculations, what they were, how much people put in, and potentially how big the round sizes were. And then you can see the progression of the pre-money, each stage of your investment, the diluted ownership over stage, and how much people own on a diluted basis. Okay, nice, simple overviews. I'm sure you can play around with them. Of course, as usual, I make little notes everywhere, so if you don't quite understand anything, like this point about the rounding area, I've got you covered there. So now let's look at the actual cap table. Now, we draw in individual sheets, the calculations into here, and in one place we can see the actual cap table at whatever stage you are. So of course we're going to start out before you've raised any money. That'll be your common sheet. So what you see here is we look at the drop down menu and we pick from list of people Alexander Jarvis, but let's pretend we got rid of him and we have Nicholas Enstrom instead. You see how the numbers magically change? Yep, you don't have to do anything. The model just does it all for you. And if you've done something wrong, we've got checks. So you can see what happened when I put in Nicholas Enstrom by accident. Uh-oh, we're 100,000 off for some reason. That's because Alex, me, had 100,000 more, okay? So you can see the common, whether or not there's options outstanding, if there's any warrants. You see the total, which is the common here, and that will be your total outstanding stock. Your fully diluted will include your options and your warrants, and then you can see the fully diluted ownership. Of course, the fully diluted is what you actually care about. Now, what is going on down here? Well, now, if you want to forecast the future and see what the potential impacts of dilution might be, that could be a little bit of a pain in the ass. You'd have to manually go in and type numbers in all sorts of different places. And frankly, life's too short for that. So I've made these plugs / error tests, where if you want to say, well, what would happen if we do a series D, E, F, G, you could type in just one place how much that round would be, and the model will automatically fill it in the right places, and the right places being these plugs, all right? So we can see for, what have I done it? One of the later rounds, probably. Here we go. Our Series G, I've just put in for forecasting scenario basis. We can see that we've got 1 million shares here and 1.4 million shares for some other person who we don't know who they are. And we have the same thing again for your Series I round. If you want to get rid of them, I'll show you how in a sec, but it's super simple. The formulas, of course, are not. But again, I've done the thinking for you. So that was our seed round, or your starting common ledger. And let's say we get to our first stage of preference shares. That's basically your Series A, really, when you're going to start bringing new people onto your cap table. All right. I see it gets a little bit bigger, but we'll come back to this at the end. The difference between the two is Anuj and Shreyu are angel investors who did a convertible, and Bessemer, Andreessen Horowitz are your lead Series A investors, and Silicon Valley are coming in for warrants. So we can see Alex and Nicholas and these guys have common. Cheryl's got common, but they're actually RSUs. And we can see that here our angel guys converted into the Series A round, and Bessemer and A16Z join in the Series A, right? So the Series A box. We now see that we still got the options here. Silicon Valley Bank have got the warrants, and we've got a new fully diluted calculations here. Everything looks okay in our checks. Now, what's going on here? So your lead investors are going to get majority investor rights. So you could actually say that maybe actually one of them might actually not get your major rights. And what really matters here is that this is for your pro rata calculations. So by putting in yes here, you're saying that your investors have major investor rights in order to get the pro rata, but they may not necessarily take them, right? We've assumed that for your Series A purposes, they've committed to it, and they are actually going to do their pro rata in this deal. So we type in for participate, yes. And then we can see that their pro rata amount was $363,000 on the basis of their ownership stake, and they actually invested the same amount. So they just followed on the pro rata. Cool. So now you're getting out to your Series B. And what's the difference here? So we can see, looks like the guys are continuing on, but we've got a new hire. Mark Zuckerberg has joined us. Oh, whoops. Seems he's joined at the wrong place because I typed it in wrong. Doesn't matter, right? Because you can see the model knows when to pull in your numbers properly. So to fix that, we just delete Mark. Thank you. Go back to Facebook. And we can see everything lines up again, okay? There does seem to suddenly be a little tiny rounding error over the Series B, which is to do with your fractionalization of shares. So you can remember Bessemer and Andreessen did your Series A. Well, they did your Series B, and so now you want to issue them more shares, but it's in a different class of share. Silicon Valley Bank are still on the warrants. They haven't exercised them. That doesn't count, you see, if your total outstanding stock, but it does in your fully diluted calculation. So you can see here, your total outstanding stock amounts to 100% here, but what's going on? 80% here, is that right? Yes. So you have these things called reserved options, okay? When you have your ESOP, let's say I have 100 shares and I give 50 of them away to these guys here, then I still have 50 left. Now, those 50 shares still exist, right? I had to give away my founding shares in order to make that ESOP pool. And so what we do is we stick them down here. Again, this is actually some pretty calculated calculations, but everything's done for you. And what's so cool about this, and what's really hard to figure out, is it's perfectly time-based. So the day before your transaction happens, the model will calculate to the point with expirations and exercises, all the little variations that can happen, what exactly to the day the status of your cap table is. That's pretty cool, right? And so this is the currently outstanding reserved options. And that'll also be important for something else in the future, but we'll come back to that. Now we can see here what happened. Well, looks like for a Series C, Bessemer is still on board, but Andreessen isn't anymore. But SoftBank has come on. Looks like Bessemer is taking 3 times the amount of SoftBank, so it looks like Bessemer is the lead. Now, for this, we've also seemed to have hired 3 more people. One of my friends in Indonesia, Pam Anderson, and Richard Branson's even on board now with some options. Sounds good. I've got a tiny rounding error again, but don't worry, it's really small, so it's really not a really big deal at all. And what's happening with our major rights? So we have Mark Zuckerberg has made an error again. So what we want to do is say that these are going to be done by SoftBank. So looks I put these in the wrong row. But again, no worries, because the model figures it out. And so we can follow on to the next round. Looks like SoftBank is now the lead. Bessemer is still hanging around. And to the Series E, and F, and G, and H, and I. Okay, except here, we're now forecasting because we never get to that stage. Cool. Now, let's deal with the real assumptions. So the first one here, we can see the current date. I'd take the current date, literally today's date, through a formula. If you want to play around and go back in time or go in the future, you can manually change this. But ideally just leave it because it should be a representation of your current cap table. So if you do mess around with it, I've made a little note here of what the formula is so that you never kind of mess it up and forget how it worked. The first thing you want to do is type in how many founder shares are actually being issued, and what you are going to have for your ESOP size. Now, these are just a little helpful calculator to make sure that you input those numbers properly into the model. Okay. These will all look blank if you've only just done your Series A. You'll add them sequentially as you get through it. Okay. So you will just have your Series A. It'll be your pre-money of, say, 3 million for 1. So your post will be 4. These, where it's not yellow boxed, they're just formulas. So we'll see the actual investment and the price per share. So the actual investment is linked to your pro rata calculations. Your closing date, you type in when the deal's done. And if you have convertible notes, then all you need to do is push these magic little buttons and suddenly everything changes. Mind blown, right? So we'll stay with the pre-money method, or it could be the percentage ownership method. And suddenly, look, everything changes. Cool, right? Now, here, we can see these are, well, you've got one assumption for your ESOP, but a whole bunch of formulas, which you don't really need to pay attention to if you don't want to, but they're a helpful guide for you to help figure out what you should have. So all you need to do if you want to say, if you're, what do we say, Andreessen Bessemer are doing your Series A, like Alex, we want you to have a 20% ESOP pool, which comes out of the pre, just type in 20%. If you can negotiate them down because of your hiring plan, you just type in 15%, and your ESOP is now smaller. The ESOP increase is the difference between what you currently have and the increase that you need to have in order to target that number. And you can see how many new shares are going to be issued, what that ending stake will end up being, and what's actually issued outstanding or available for issuance under your plan. Next, we can see our pro rata calculations. So with our pro rata calculations, here it's just a little bit of a guide. You can type in how much you're sort of thinking about raising, but this excludes your pro rata if you have one. And you can see what your max round size with a pro rata would be. So if you pretend that Andreessen and Bessemer do not invest out of that 2 million, your max round size, in order for them to get their pro rata share, which is 31.3%, the max round size that you could do there would end up being 2.9 million. Of course, maybe they are actually just going to end up doing more than the pro rata and doing the full round, so that won't matter. You would just, in the cap table, pick whether or not they are participating and taking the pro rata, and then that will take the investment amount for you. But here in the assumptions, you can have a play around and figure out how you actually want to do things. With preference shares, sometimes they want to be a little bit greedy and sometimes they'll be a little bit nice. You almost always are going to have a liquidation preference. If you're getting more than 2, 3x, things are pretty bad. Participating preferred is one of the only things which is the model. It's not standard. The truth is I couldn't find anyone who could do the math, and I couldn't make it work for all the scenarios, so I just didn't include it. If you're getting to the stage where you can do that, frankly, you can afford to pay someone to do this for you properly, right? If you just want to then change liquidation preferences 1x, 2x, 1x, 2x, 3x, 4x, just type in the number, boom, feeds through the model. Thank you very much. So that was a quick run through assumptions. There's a lot of levels of complexity or detail which you can get into, but you don't need to deal with it if you don't want to, right? So let's say people are not asking you to have, new option pool sizes. You just leave them as 0. It's not a big deal for you anymore. Let's follow, each sheet in here. So we'll look at what happens if there's an output of this. And these are going to be the returns. So there's 2 ones. One is for every class of investor, which was what was in the original ultimate cap table, the free one. In this, I've made another one, which is for individual calculations. So if you are wondering, hey, what does an investor or one of my angels or one of my staff or myself, what am I actually going to get depending on the scenarios? And that's where those plugs that we talked about, which you can forecast in the future, become really useful. So if you're going to assume you're going to do 3 more rounds of dilution before your exit, you can actually see the impact on your ownership and return stake by, adding in 3 numbers and then coming to the sheet and actually seeing what it looks like. So we can say KKR here come in on your E and your F round. That's why you can see that they have the E and the F shares, the blue and the yellow ones. Okay, the rest is quite a lot of money, but you can see there's nothing coming on here because they're not going. There are people further up the waterfall who are going to take that money before they get any, right? So this is a gap in them taking liquidation preference. But you can see this gets larger over time. Here you can see liquidation preferences pretty much the same because they're not getting any more money. Let's say we don't care about KKR. We want to see how much this big guy is getting. Now, I'm not getting squat unless we sell for $700 million. Fuck. Yeah? This sort of reminds you of a couple of companies, Box, that have gone public and the founders haven't done so well because of those liquidation preferences. Well, a couple of other things, but there you go. So that's it. I am literally not going to get any money unless I sell for $700 million. Right? And this gets a little bit bigger over time because liquidation preference is coming in. And it steadily just goes up linearly basically over time then. All right, and you can see here's my returns. So I get 5 million at a $700 million exit. Great. But at 2 billion, I'm making 40 million bucks. Okay. You can see I just own common class of shares here, and the total returns is for everyone over time. So you can see what I was explaining with that liquidation gap is that Series I guy is taking everything up to 300 million because that's what their liquidation preference would have been, $300 million. At 350, the Series H guy starts getting some. At 500, your Series G guy starts getting money. Again, you can change this for all sorts of people. So remember, Bessemer seem to be pretty active. So Bessemer participated in 3 rounds, but they're not getting squat either until $700 million. Wow, right? You can see that they own quite a lot of the classes of shares of your C, B, and your A rounds. And that's the return profile. Pretty cool, right? All you need to do is change the drop-down menu, and everything changes for you. Now, let's look at the returns to all shareholders. Now, this was not fun to make. And again, there's only 2 people in the world who've done it, and this is the only model which I think actually works. So, where's one funky little assumption here is what happens when you deal with those unissued options. So remember I said that we could have 100 shares for your ESOP, and maybe you only give away 50 of them. What happens to the other 50? Well, here, you could assume they either disappear or they don't. And the model will decide how returns will be allocated to people. I did some little complex stuff here in case you want to play around with scenarios. And you can decide what happens with the acceleration of options. And that's also going to be a negotiation with your investors and your potential acquirer. So you can either take what you put in the model, which is your actuals. You could say force acceleration, which means everyone's accelerating, which is really not going to happen, but you can play with it. And you can force no acceleration, which is basically your buyer saying, we are not buying you unless you don't have acceleration. And that may happen. Typically, your CEO, CFO, head of council, they will get acceleration because they can cock up the deal, and they're pretty much critical to the deal getting done. But pretty much everyone is not getting that. Because it's sort of saying like, you know, shut up time, guys. So you can type in the date of exit. Why is this relevant? Because you can decide what point of time, like a snapshot, you want to see into the future. That will also impact on your vesting, because most people are going to be on 4-year vesting, right? So if you forecast this 2 years in the future, most people have only vested half their shares, and half of those may and may not disappear. And here are little calculations depending on the accelerations. What happens to your common and restricted stocks? We can see a little summary here, all the shares, and these are just used for the waterfall calculations. So we can see this nice big huge graph for a range of values, which I've set between 50 million and 2.6 billion, how much everyone owns by each class of share, depending on the exit value. It's pretty cool, right? And that's a percentage of ownership. Here you can see the dollar amount. And it all adds up to the same amount. So 2.6 is here. 2.6. Now, you may not be aiming for a $2.6 billion valuation. And let's face it, most people are not going to get it, right? So you could say, well, the central value I want to have is going to be a $40 million exit, is my central number. Have we done that right? 4 million. No, I want to be 40. 1, 2, 3, 1, 2, 3. And so the variance I want to have on either side of my number is going to be 2 million. It doesn't quite get it. Let's go 1, 3. So you can see 15 to 67 million is now your range. Okay. I need to put these back, otherwise the model will look a bit funky. Okay, so 0 all the way to 2.6 billion again. Now, this is called like a waterfall return analysis. Why waterfall? Because the water comes down from the top and all the way to the bottom to the crummy little founders and their peon staff, okay? And the last money in is the first money out. So your Series I, if you have it, is the first person to take the money if they have got a liquidation preference. If you don't have a Series I, it doesn't matter. You forget about them and you just go all the way down to maybe your Series C or Series B or your Series A. But the model will just figure out if it happens. Now, you can see at a $50 million exit, they would take their proceeds and payments would be 50 million bucks, okay? So now let's look at the Series I, okay? There are a whole series of calculations here, and I've purposefully added more rows than needed because with this stuff, more information is better than not because it's pretty important stuff. And I have a whole bunch of tests here to really figure out how does the waterfall work, right? Do people take the liquidation preference or do they convert their preference into common stock, okay? And you can see here, this first test says that they were converted to common, but 2 of the other ones fail. Now the second one passes. And here, at 1.3 billion, the third test passed, so this converts to true because the 3 tests have passed it. And they'll take their $325 million instead of their $300 million. You can see here with these guys, your Series H, they actually convert to common earlier than your Series I guys. So they'll be taking their 169 instead of their 160 million liquidation preference. And the same thing goes all the way down. And if you want to check anything makes sense, there are just so many line items. I've set it out. And there's actually feedback from founders that I've had that they prefer this way. Hopefully you enjoy that now. And so we can see the total amounts, the proceeds, and the preferences and the common, who's getting what. And it goes all the way down. So this is like a whole bunch of rows in analysis. You can see the per share returns, the multiple investment. Trust me, it was about a week's work, week and a half work, just doing this spreadsheet. Now, let's get into your actual ledger cap tables. So every type of category of share has their own sheet, which makes it really easy to sort of zoom in on whatever it is you're focused on. And so if you want to say add 2,000, new staff, you just add more rows in above the total. You just keep going all the way down. You can add something like 1.6 million rows in the sheet. But you know, knock yourself out. And to add more people, all you do, oopsies, is you just add someone from your drop-down menu. All right, so we'll say, I don't know, SoftBank goes in here for some reason, right? That's simples. So you add in who your ESOP, your staff are, the date of the grant. Now the formula automatically is going to take your grant date, but you want to just, for posterity, calculate when the board date was, how many options you grant them, and then pick the type of share that they have: restricted stock, ISOs, NSOs. If it's restricted stock, it's treated differently, and this thing is a bit of a mind fuck. Okay, this is really hard for me to figure out, but effectively they get accounted for as common shares, which sort of reversed vest, but they come out of your ESOP. So the first thing you do, if, you know, I think Sheryl Sandberg is the first person who's going to get restricted stock, is you put them on the ESOP ledger and then set them as RS, and the model will then effectively deduct them out of your ESOP, and then you need to put them into the common. And there are error checks at the bottom here, which will tell you when this doesn't work out, because I know it's not intuitive and it's something you'll be prone to forget. So I purposely had to do some complicated calculations to make sure that you wouldn't do it wrong. Okay, the best thing to do is to look at the example that I've done, and I've made a couple of examples of what happens to shares depending on different scenarios, and you can see kind of how it works. Okay, so you put in what their exercise price is. You can decide on their vesting schedule. So as I said, I made 3 examples for you. You just pick it from the drop-down menu, the simples. Do they have accelerated vesting? Yes or no? If you were doing it simple, you would leave it there, but cap tables aren't simple. So I had to figure out all the variables, the variances which might happen, okay? If people exercise, you notice I've got little formulas here. You need to make deductions and adjustments. Okay, so if it's restricted stock, I have got a template formula in there. If it's not, then you just want to input these like I've done here in blue. Now, if people are terminated, they leave, maybe they're going to cancel their shares. You want to put in the date, always put in the dates, and make calculations for how many shares actually get cancelled. So with the purposes of your restricted stock, they will get repurchased potentially. If options expire, that's also where you're going to put in the change. Otherwise, so a little error, you can actually see what's outstanding and what's actually vested here. So number of outstanding options, vested date 10,000, vested acquisition date 10,000, accelerated calculation 10,000. So that's because the people have actually vested their shares. You can see, I don't know, here, this person had 1,000 shares, but actually by the point of your hypothetical acquisition date, they will have only vested 750 shares. There are some very funky calculations that go on here to manage all little weird scenarios that can happen. Feel free to go through them if you like. This is not going to be the world's largest legal explanation session though, okay? So the final thing you want to do is, when things happen, comments, right? Restricted stock was issued from the ESOP, which means you're going to put it into the common stock now. Here, terminated, exercise their options, didn't meet the cliff, or did not exercise their options, in which case they expired. Okay, let's get into the common now. Again, drop down menu, who the shareholder is, what the issue date was. You can narrow it out and type in the cert numbers. I did conditional formatting for you already, so you just type in 5. Oh, look, CS005. Pretty cool, right? Now, what are the type of shares? Is restricted stock or other? If it's just common stock, it's other. If it's this weird RS stuff, you put it in as RS, and I need that because the formulas need to pull from them. And then you put in how many shares they have. And we do a little calculation here to tell you how many are outstanding, which drives the model. Now, the basis of issuance is, where did it come from? So original issuance is like, I started the company, I issued myself shares. So here is the example of Sheryl Sandberg. She got restricted stock from the ESOP, or options were exercised. So the ESOP people will come into your common because they're effectively getting the shares and they're getting common shares, or getting the options and they're getting common shares. Share transfers, This is where we start getting a little bit weird. You can move your shares from one person to another, or you can actually do various number of weird calculations and then have the balance after your purchase. So you could say like Alex wants to give shares to Nicholas. You don't make the edits in each line, you add a new line. So it would be, you know, Alexander Jarvis, oopsies, Alexander Jarvis here, whatever, 21st of December 2020. This is going to be on a here, which was other, will be, you know, giving 50 shares to someone else, right? And so you keep on adding these lines and it'll make deductions, and Alex doesn't have these anymore, okay? That's what Laura's basically do, but I'm not going to get into this right now. So you put in the price per share. Obviously, that's the price which they can actually purchase the shares from. The delta between that and the price you sell for, the sell price, is going to be the upside for them. So the lower the price, the better, okay? As you can see, over time, this gets higher and higher. Disposition means basically shares do stuff, all right? So you type in the date and the reason. For example, I don't know, maybe terminate someone, okay? Here, the RS vesting is just a little note which pulls in from the ESOP where you have restricted stock and lets you know what their vesting schedule or their acceleration terms are. Now, let's look at the convertible notes, okay? Underlying class of stock, which they'll convert into, is if they go in at your common, your seed kind of stage, then that is going to convert into a qualified financing round, which is normally like your Series A, because you don't really raise convertible notes as like a Series B round, right? So you have to type in what the class of share is that they're going to convert into. So that's typically your Series A. The issue date, what the maturity date is going to be, which is typically 12 months. If they're cancelled, why are they cancelled? How much should they invest, what the interest rate is. The model automatically calculates the interest rates for you. If you have a cap, what the discount rate is, and then the effective discount. So if you have a cap and a discount rate, investors can pick which one they want. Okay, and obviously you're going to take the preferable one. I do the math for you, so you don't have to. Yay. And then we can see what happens when they convert, how many shares they're getting, and what the interest amount was, etc. Okay, cool. Let's get into warrants. Basically the same thing. What does it convert into? What's the exercise price? How many warrants did you give them? And then comments, right? If they cancel, etc. Cool. We are on your preference shares. So your Series A to I. Now, every sheet is structured exactly the same. Okay, it just has a different little letter on it. So I'll just go through one, but I'll go through another one to show you kind of what the delta is between these. So let's see here we have linked assumptions. So lets you know that the price per share calculated in the calculations sheet is 7.89 is the price per share. And the closing date was X. And so the issue date should be this closing date. You have the cert number, you just drop down menu. The investor was as your Series A. Of course, you want to check this sheet to remember who's doing what. In our cap table, remember we had here, do their pro ratas. This will pull in. You can see what their actual investment was. Here we see share from notes and converted principal. That's for our two little angel friends here of mine. Okay, and then you can see how much they invested and how many shares that they get, and then the aggregate number of shares that they're going to have over time. And then you have your basis of issuance. Again, original issuance is because basically they're just buying these shares, right? They're not, if you had, you know, like someone doing a secondary, then it could be like a share transfer. Okay, put in the price per share, which again should be coming from here. There shouldn't be a reason why people are having different prices, right? Disposition date, fancy reason for like, you know, things disappear or get sold, and then put your comments in. And then here you can see that we have our Series A plug thing again. Okay, I'll show you on another sheet. It's not happening here. You can see it's all zeros. And then we have our little summary. So if you want to add more people in here, right? So for some reason you've got like a crap load more people, you just kind of copy everything down. Yay, right? And you just keep on adding people. And the whole thing's just been structured up. If there's any changes that happen in the sheet, you treat this like a ledger, okay? Where like things keep on changing as opposed to like making your adjustments in line. Okay, this is like the approach what real actual lawyers will do for you. We have checks here to make sure everything makes sense. Now, Series B, we can see, oh, there's only 2 line items. Why are there only 2 line items? Because there are only 2 people who own the class of share of your Series B. And in the same way, there's only 2 people who own the class of share of your Series C. There's only 1 person who's got a class of D. 2 have a class of E. KKR have your F. And, oh, there's no one here. But our plug is now coming into action, okay? So in your assumptions sheet, you did a forecast and said, you know what, my Series G, I'm going to raise an 80 on a 240, okay, or 160 on a 480 if you're a H. So we go back to our G, and we can see that 80 million has just been magically pulled in, and it just fills it in for you, and you can see what the effect's going to be, okay? Now, this check says that the amount is wrong, because this is a check for reality, not make-believe. And that's what the cap table actually really cares about. So this will only say amounts okay. It is trying to make the model adhere to the truth. So if you have it in your forecasting, imaginary forecast, that says amounts wrong, it doesn't matter, right? But you can see how the plug is enabling you to automatically sort of forecast in the future and see what the effects will be on how many shares you'll get, what the purchase prices will be, changes on the share prices, etc. And the same thing happens here. Remember, they were doing 160. Well, it's actually slightly bigger than 160 because you have a fractionalization of share that they were accounting for. Again, it says amounts wrong, but the stated amount and the plug are right. And here we've got a 320 million investment. Remember, those guys took a vast majority of the investment range. Well, that's what's happening here. Okay, so all of those sheets integrate with each other. So remember, we just went through all these. We can see that they did a 320 in your Series I. Well, everything links together. It's a fully integrated model. Everything links everywhere. Okay, guys, that was sort of a quick, relatively quick, maybe slightly boring, I don't know, you tell me, a review about the ProCap table from 50fold. There is a whole lot to it. I am barely scratching the surface of kind of really explaining how it works. You can get as detailed as you want. Maybe, probably, you know a whole lot more about cap tables than I do, and you can get your legal on. But this is the most amazing template you're ever going to find, and honestly, I priced it super low just because I want more people to have access to it. That's got nothing to do with the weeks, literally weeks, that I spent making this thing. And I kind of lost a little bit of probably hair figuring this out. So if you need a professional cap table, this is it. I would not have made this thing if someone else had done it already. So like my ESOP model, my fundraising models, I really try to make something which will be awesome for you guys. If you got any questions, feel free to reach out to me at help@alexanderjarvis.com. Cool.